I remember the exact moment everything clicked. I was at work. Halfway through a Tuesday that felt like every other Tuesday. My phone buzzed. It was my brokerage app. $43 just deposited. Not from anything I did that day. Not from my paycheck. From a system I'd quietly built 6 months earlier, running in the background, while I answered emails and sat in meetings. I put the phone down and I sat there because that $43 permanently changed the way I think about money. This is how I got there and why $10,000 was the turning point. A few years back, I was doing everything right. Good income, disciplined saver. I had about $10,000 sitting in my savings account, and it genuinely felt like progress, like I was building something. But here's what I didn't see. Inflation was running above 3%. My savings account was paying me around 1.9. That gap meant my $10,000 was quietly losing real purchasing power every single month. Slowly, without showing up anywhere obvious. I was working harder to save money that was silently losing the race against time. So I did what most people do. I saved harder, cut expenses, automated transfers, tracked everything in a spreadsheet, and I felt disciplined. But the number barely moved. Not because I wasn't saving, because saving alone doesn't grow anything. It just slows the decay. Money sitting still isn't resting, it's losing. The bank earns returns on your deposits. You earn almost nothing on them. I had discipline. What I was missing was a system. The shift happened when I stopped asking how to save more and started asking how to make money move. Those are completely different questions. Saving is storing. Storing is waiting. And waiting has a cost. What I needed wasn't a better budget. It was a machine. A structure that takes money and puts it somewhere productive. Somewhere it earns while I sleep, while I work, while I live. And a machine has layers. I split my $10,000 into 3 layers, each one with a specific job. The first is protection, 20%, $2,000. It doesn't go into any market. It goes into a high-yield savings account or a money market fund. This is your firewall. When something breaks in real life, you tap this, not your portfolio. Most people destroy their investment strategy not because they picked the wrong asset. They destroy it because an emergency arrived and they had no cash ready. This layer fixes that. The second layer is the engine, 60%, $6,000. Core portfolio, broad market ETFs. I split it roughly 70% in stock ETFs and 30% in bond ETFs. Stocks grow over the long run. Bonds stabilize when markets get ugly. Together, they move through cycles without requiring you to panic or predict anything. And I deploy it slowly. $1,000 per month over 6 months. Dollar cost averaging. Automatic. Emotionless. No timing required, no stress. The third layer is the opportunity fund. 20%, $2,000. It sits in short-term treasury ETFs, earning 2 to 3% while it waits. When the market drops more than 15% from its peak, I deploy this money. Methodically. On purpose. You don't need to predict the bottom. You just need to have the cash when everyone else is selling. That psychological advantage is worth more than it sounds. Here's what this machine actually produces. At a conservative 6% annual return, $10,000 becomes nearly $18,000 in 10 years, without adding another dollar. But add just $200 a month on top of that initial investment, money most people spend on things they forget a week later, and in 10 years, you're looking at over $50,000. In 30 years, that same habit compounds to over $300,000. That is not a trick. That is what a machine running on time and discipline actually builds. Here's the part most people miss when they see those numbers. The gap isn't just about money, it's about time. Every year you wait, you're not just losing 1 year of interest. You're losing the interest on that interest. The compounding multiplier that grows larger every single year. The person who starts this system today and the person who starts it in 5 years aren't 5 years apart. They are exponentially further apart than that. The machine needs time more than it needs anything else. Now I want to be straight with you. This system is real. The math holds and it works. But it has a ceiling. If your income base is limited, compounding is slow at first. $300,000 in 30 years is a real number, but it requires 30 years and consistent deposits. And after my machine was running, I started noticing something I couldn't explain. Some people with the same knowledge and similar discipline were pulling ahead faster, not because they picked better assets, not because they took more risk, because they were operating with more capital than they had personally saved. That question sat with me for a long time. The answer isn't what most people expect. It isn't insider access. It isn't higher risk tolerance. It isn't a secret investment nobody talks about. It's a completely different relationship with capital itself. One where your own savings are the foundation, not the limit. If this video changed the way you see your first $10,000, subscribe to the Profit Lab. We do the math so you don't have to. And if that last question is sitting in the back of your head right now, the one about how some people grow wealth faster than their savings alone could ever explain, that answer is in the next video, right there. See you in the next one.